Hello and welcome to Wall Street to Bay Street. Today I wanted to do a quick update. Today's Friday, July 2nd, 2010, and I wanted to give a quick update on the status of the markets, where we are, and where we could go prior to the July 4th weekend. If we take a quick look at the S&Ps, I'm using the SPY as a proxy. As you probably noticed, we've developed a distinct head and shoulders formation. If you look right here, here's the first shoulder, the head, and the second shoulder. And this level right here of about 105, which corresponds to 1040 on the ES, was broken earlier this week. Now this confirms a change in trend upward to downward in the market, and my expectation is that we will see a move below this trend line equal to the distance from the trend line to the top of the head. So roughly, top of the head is what, 21, 22. So we'll see another 16-point drop or so from the 105. So I would target over the next several months a 90 to 95 range on the SPY. Oh, sorry, 85 to 90 on the SPY, which would bring us right down here. And as you can see, there's some support at these levels from prior movements. We've had once we crossed this level, this was support, and it was resistance for a while before we dropped down here. Now, that being said, I would expect some sort of bounces over the next few weeks, few days, and these would be selling opportunities, whether that's to sell positions you're already in or to establish new short positions. I would not be buying this rally. There's some people out there like Doug Cass who thinks we have traded to a potentially yearly low. I'm going to disagree with that. Over the next few weeks, what we will be doing is we'll probably do more updates and be looking at specific targets, specific stocks I should say, to sell as we have the various rallies. Right now we're probably in an oversold position. That does not mean we can't become more oversold or stay oversold for a time period, but I would expect some sort of rally, and those are the opportunities to look at putting out new shorts or getting out of positions that you wanted to get out of. Sectors to look at rallies, I'm looking at the RTH. I'll just pull over here, which is the Retail Holders Index. You can see it's definitely downtrend. If we get a pullback to 90 or above, I would definitely say that's a great place to sell, but you'll get resistance sort of in this 90 area now. Once we've broken that level, I would look to sell any rally as close to the 90. And in cases like this, what you can do is you can sell or write call options to generate some income if that does not happen, or to get your stock in that spot. In the Wall Street to Bay Street portfolio, the Investopedia does not allow us to write options, but we will move from there. In our regular portfolios, we would tend to write some of these options to give us good entries and good targets, and also generate some income should those targets not be met. Now, another one I would look at shorting is the real estate index. Now, it's been relatively strong and relatively stable over the last several months, and it hasn't breached its flash crash lows, but we are weakening, and the economy does appear to be weakening. From the ISM numbers, it looks like the inventory buildup is coming near an end, and if that is the case, unemployment will continue to drop. I hope I'm completely wrong on this, but I think that will happen. A quick update on some of our portfolio stocks. Gold took a big dive yesterday, 40 some odd dollars, and it is still maintaining its trend line. So let's put a trend line on here. Trend line, start right here. So it's got a few, say $30 or $40 drop or leeway still allowed to come down before the trend line is breached. If you have not purchased physical gold, I would look at these pullback opportunities in gold to buy at least a portion of your physical gold. We may get another opportunity down to the $1,000 or $100 mark later on this year, but there also is a very good chance that gold will continue to rise. Yesterday, as you can see down here on our chart, which is a value chart, when it comes down here to -8, it's considered to be oversold. So we should get a small bounce at least off this level yesterday. And we were stopped out of our oil trade in the portfolio. Oil does look like it's going to go lower. And if the world economy weakens, I think this will continue to drop. What would be interesting here is if the Chinese let their currency float more and strengthen their currency, and their economy continues to grow, they could end up buying more oil, taking supply off the market, and over longer term create greater demand for this, pushing up the price. But that is not happening yet. The other thing, the euro has been rallying the last several days. Now it's been rallying off a severe trend, downtrend, and we've been accumulating a short position in the Wall Street to Bay Street portfolio. Now at these levels I would continue to add more, all the way up to 130. This currency is very weak. It's an established downtrend, and with the severe selling it had over the last several months, you could expect a bounce over the next several weeks. So we will continue to sell pieces of the euro over the next several weeks up until the 130 mark, and then look for the currency to come back down here. And that's today's final recording for July 2nd. Good trading, good luck, good investing, and we'll talk to you soon.